Ladies and gentlemen, I hope you're all doing well. Fannie Mae released their home price index for Q1 2022, and I wanted to read it to you. Okay, so Fannie Mae announced today the publication of the Fannie Mae Home Price Index, a national repeat transaction home price index measuring the average quarterly price change for all single-family properties in the United States, excluding condos. The Fannie Mae Home Price Index accelerated in Q1 2022 to its fastest annual pace in the 47-year history of the index, measuring 20% year over year, non-seasonally adjusted, up from 19.1% annual rate recorded in Q4 2021. On a quarterly basis, home prices rose a seasonally adjusted 4.8% in Q1 2022. So basically, the Fannie Mae Home Price Index is an indicator for measuring home price growth for economists and housing industry stakeholders. Let me carry on. After decelerating towards the end of 2021, the Fannie Mae Home Price Index sped up in the first quarter due to continued strong homebuyer demand and lack of inventory. We believe recent home buying demand was augmented by many homebuyers pulling forward their home purchase plans in anticipation of rising mortgage rates. Now, with rates having sharply risen since the start of the year and some of that home buying demand now met, we expect price growth to begin cooling as the year progresses. So this is very interesting. Okay, so let's go over the mortgages. So Mortgage News Daily has the current mortgage rate of a 30-year fixed rate at 5.25%. So that is based on Freddie Mac minus the points, and it's pretty accurate. However, I want to bring something to your attention from Money Magazine that was released on April 18th. It says today's mortgage rates soar to nearly 7% April 18th, 2022. Now, that might sound like clickbait, but in actuality, it's not. After briefly falling below 6% last Friday, the average rate for a 30-year fixed-rate mortgage jumped up to 6.875%, increasing by more than 1 percentage point. The rate is nearly 2 percentage points higher than the average rate just 1 month ago. Rates for most other loan categories increased as well, although not quite so dramatically. It goes on to say the average rate on a 15-year fixed-rate loan, however, moved lower. So as you can see, the latest rate on a 30-year fixed-rate mortgage is 6.875%. So, and it does have a caveat here. Money's daily mortgage rates reflect what a borrower with a 20% down payment and a 700 credit score, roughly the national average score, might pay if he or she applied for a home loan right now. Each day's rates are based on the average rate 8,000 lenders offered to applicants the previous business day. Freddie Mac weekly rates will generally be lower since they measure rates offered to borrowers with higher credit scores. So that is very, very eye-opening. Okay, I want to wrap this up. I want to go over we have new data from Realtor.com for March 2022 monthly housing market trends report, which is a pretty good report that comes out every month. The national inventory of active listings declined by 18.9% over last year, while the total inventory of unsold homes, including pending listings, declined by 12.5%. The inventory of active listings was down 62.3% compared to 2020, right at the onset of the COVID-19 pandemic. In other words, for every 5 homes available for sale in the earlier period, today there are just 2. Newly listed homes were down 3.4% nationally compared to a year ago, and down 5% for large metros over the past year. Sellers still listed at rates 12.2% lower than typical 2017 to 2019 levels prior to the pandemic. The March national median listing price for active listings was $405,000, up 13.5% compared to last year, and up 26.5% compared to March 2020. In large metros, median listing prices grew by 9.1% compared to last year on average. Nationally, the typical home spent 38 days on the market in March, down 11 days from the same time last year and down 21 days from March 2020. So March housing data release reveals that the 1-2 punch of rising interest rates and all-time high listing prices has moderated demand for homes. Another caveat here, inventory may see growth by summertime. Nationally, the inventory of homes actively for sale on a typical day in March decreased by 18.9% over the past year, a smaller rate of decline compared to the 24.5% drop in February. This amounted to 89,000 fewer homes actively for sale on a typical day in March compared to the previous year. The total number of sold homes nationwide, a metric that includes active listings and listings in various stages of the selling process that are not yet sold, is down 12.2% from March 2021. This is also a smaller rate of decline compared to the last month's 15.3% decline. If current trends persist, we may see active and total listings grow over last year by June or July. So that's very promising. Okay, so what is the takeaway? Housing prices are up, inventory is down, mortgage rates are much higher than we're being told, and demand is starting to cool. The market is evolving. If you like this video, please subscribe and like this video. I'm a Florida, Georgia real estate broker, not a financial advisor. Thanks again, and we'll see you in the next video.